Hey guys, welcome to another video and thanks for clicking on this one. Another red day today, and unfortunately, we're down. And this is not too bad. Yesterday was a little bit more. Yesterday was about $420 loss, but today we're only down about $45 and less than 1%. So I take that as flat. But here's the deal. Seeing red days can be discouraging. But like I mentioned in my previous video yesterday, one of the things that I try to do is to make sure that I consistently invest when it comes to this journey of reaching $1 million, especially what has gotten me to this point worked all this while. So why should I change anything now? And what I've been doing is to consistently buy good stocks that grow over time. There will be times like this when it's red. Now, the good thing though is that a lot of analysts are still predicting that going into 2026, there will be a continued bull run, somewhat maybe not as aggressive as we've seen, or maybe not as bullish as we've seen, but somewhat to some extent there is room to continue to grow and continue this bull trend that we've been in. As of today, the stock market, the S&P 500 has returned around 17% through the year of 2025, which is amazing because even if the money was invested or saved in a savings account, you wouldn't have gotten anything close to that. My year-to-date return right now on this account is about 7,640, and it's around 16% or 16.33%. That isn't spectacular, but at the same time, we are not doing bad, because if you think about it, the S&P returned around 17% and this returned around 16% so far. So that's not bad at all. My hope is that next year we even do better than this. And that will require some things. One of the things that I plan to do is to use some of the strategies that have worked in the past, but to actually be more aggressive in the future. The reality is that some of those times that I actually bought the dip worked in my favor, as you can see around this mark. This was on the April 1st Liberation Day, and we saw the market sell off, and I bought some shares, but I wasn't as aggressive. And I'm pretty sure that if I was more aggressive, I would have actually had better returns, because this was a significant buying opportunity. So looking forward, or at least predicting what is likely to happen next year, there will be opportunities like this again, and my plan is to be as aggressive as I can be. Hopefully, I can increase my buying power so that way I have some cash to deploy when the opportunity comes. Now, one of the ways in which I'm planning to get more cash, of course, is one, try to work on my income. One of the ways you can increase your income, of course, is maybe side hustles, maybe get a second job, maybe doing Lyft, Uber, whatever it takes. And honestly, I'm willing to do any of those things, especially when I have the time to do so. So my hope is to be able to work on that, and also maybe work on my spending. The more I can cut off or cut back on my spending, the more I would have to save and invest. So that is really what I'm thinking of going into 2026. The plan again remains the same. We continue to invest in good companies. I would obviously be weary of investing in companies that may not have good track records. That doesn't mean that I'm not going to invest in those, but the percentage of my portfolio will, the higher, most of the value that of the portfolio will be invested in stable companies that continue to show good earnings and continue to grow in strength. That is really the focus, and I hope to continue that even into 2026. I want to wish you a happy new year in advance, even though today is the 30th at the time of recording this video. We still have one more trading day tomorrow, which is going to be a shortened trading period, but we'll see what happens tomorrow. Maybe we can get some good bounce tomorrow, or maybe not. We will see. I hope to see you in a future video. Thank you.